So much about the description of the market as we saw it in 2012. Now I would like to talk shortly about the outlooks, so the future, how we estimate it. A very important note that these arrows that you see on the chart do not refer to the decline of the market in case of Hungary or Poland, for example. What they mean is the change of growth, short-term growth, so within 1 year, compared to the growth rate of 2012. Having said that, my second important point is that we do not forecast any of the countries to decline in the coming years up until 2015, which means that that the worst case some markets will stagnate, but none of them will decline in the coming years. Let me go through quickly the countries. Bulgaria already has, of course, a growth rate that is not comparable to pre-crisis levels, but since the crisis, I would call it healthy, around 2%. The Czech Republic will remain at a stagnating level, so a growth rate of around 1% annually. The picture for Hungary and Poland is quite different because Hungary will drop its growth rate in the coming years, but Hungary has the highest growth rate actually in 2012. So this drop will still mean a quite strong growth, as we forecast for 2013 a growth rate of 3%. For Poland, and this will definitely affect the whole region, Poland will go into a stagnation in the coming years, so in 2013 and maybe in 2014 as well. The growth rate will drop below 1%. While for Romania and Slovakia, Romania, as I already mentioned, is one of the two countries that will grow twice as fast as the average of the region. The other one is Bulgaria. While Slovakia contracted in the year of 2012, so this arrow only means that they will come out of the decline and they will show low level of growth. As for risks of the coming years, I already talked about the risk of exchange rate fluctuations that will definitely have to be considered on the market. And unfortunately, this is basically out of the hands of these countries. So it is the exchange rates are mostly defined by global processes and global outcomes. The other risk that we see is an economic one, so the performance of the Eurozone economies that affect the purchasing power of the consumers in the region. There we see, in addition, some political risks. There will be elections in several countries in the upcoming 2-3 years, and as we saw from historic data, such election years tend to affect sales very substantially through the mood the election campaigns generate. And we also see the risk of altered consumer habits as a result of certain policies run by pricing policies run by the retailers.